Hi guys and welcome to the trading show. This week we are gonna talk about
markets, stocks dropped. Our portfolio, energy market flies. Tip of the week, energy market breakout. And the weekly rollover.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Certainly the most impressive thing to report this week is the fall in equities. In this chart we see the Nasdaq, which was clearly in a strong uptrend, and as often happens in these cases, after a such strong, almost parabolic rise, a sharp slowdown follows. All stock exchanges are bearish, American and European, and the energy sector, which is at least partially correlated, is also slowing down. Contrary to what we hear, even Bitcoin, which by some is considered a safe haven asset, is losing more than 10% over the last 5 days and has returned to the levels of about 1 month ago. On uptrend, we can see instead the lean hogs future and also coffee future. In general, there has been an increase in volatility in all markets, in particular on equity markets, both in terms of historical volatility and implied volatility. Let's now analyze the term structure of the implied volatility. In this chart, as usual, we see the trend of different VIX indexes on the S&P. As we can see, there has been an explosion of volatility following the recent fall in equity markets. In reality, volatility was already rising a little bit in recent weeks, even with the markets going up, which is not usual. But obviously, following the latest market decline, we are witnessing a significant increase in volatility. In my opinion, however, the term structure of a VIX future is even more interesting because we have something absolutely unusual. There is a backwardation on the whole curve except on the first maturity. It is absolutely an unusual situation and is essentially due to the American elections that will be in October. The outcome will be uncertain for the first few weeks, at least it seems so. So we see high volatility also on the November expiration. Obviously, over time, this volatility is destined to decrease because even if there were some market crashes, violent movements of the stock index under the US elections, in the long run this will be reabsorbed, so it is quite normal to see volatility falling along the curve. A backwardation, therefore. In fact, we know that in the long term, volatility will tend to return towards average values. Obviously, before the elections, traders have no reason to be worried, so this is the reason why we see the volatility of a September future much lower than that of October. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hello everyone, from Alessandro Danos. Today we are talking about system on the crude oil futures market made in 2017. And unlike what one might normally think, this system is a reversal strategy that we know is not the main characteristic of this future, the crude oil. But we see that with a view to diversification, a few years ago we had tried to program a strategy that could be different from the other proposals especially trend following. So we developed this strategy of mean reverting type, which I must say is it performed really well, although not the characteristic, the predominant characteristic of the underlying. As you can see from the equity lines, we see that the strategy does not make a lot of entries, but in any case, when it does, you manage to bring home some excellent profits. In the last week, it has achieved this good series of one long and one short trades, and we see that they have closed for $240 one trade and $200 the other trades. We see also how the previous three trades are positive. We have here 900, 900, 900, which is the value of the take profit target, therefore a relatively short profit, and having an average trade that results $140. On the long side is negative by $15, while on the short side displays $276 in the last 39 trades. Well, let's go on the next system. It is a system on the S&P 500 futures developed on a 15 minutes time frame, and is a so-called hybrid system, in the sense that it provides both a reversal entry and at the same time a trend following entry. In particular, the trend following operation concerns the short side, while instead the reversal operations regards the long side. We see how yesterday with the short you see here, the system followed the market when started to move down, and then the system entered breakout. And we see that it managed to get a target, a take profit of 80 points, which is $4,000. This trade led the strategy to reach new equity peaks. And we see also that thanks to the last profit done in the day of Thursday. The system managed, we have said that, to bring home $4,000 with just one contract. The average trade of $217 in the last 55 trades is great for mini S&P. And we can see that absolutely the long side is the one that manages to make profits, while we see the short side is struggling. However, in moments of high volatility, as recorded during yesterday's collapse, it is always convenient to have a system that can enter short trend following, and therefore can help us mitigate any crashes on the market.
Hello everyone, from Andrea Unger, and today we will analyze the energy futures markets, and in particular we will try to understand if it's better to develop reversal trading strategies or breakout or trend following trading strategies on this kind of market. So basically here I have opened the portfolio trader on multicharts, that is my trading platform, and here I have added the main 4 future contracts that belongs to the energy asset class. And in particular, the first one is the CL future, that is the light sweet crude oil future, and as all the other ones is listed on the NYMEX exchange that now is part of the CME group in Chicago. But these futures in general are listed in the NYMEX exchange, so they have usually the New York timestamp, and they are listed into the New York division of the CME group. The second one instead is the heating oil future. The third one is the RBOB gasoline future, and the last one is the natural gas future. And here I have applied a very simple strategy, and in particular this strategy will try to enter long into the market, putting a stop order on the highest level, so on the high extreme, so on the high of the previous session, and it tries also to enter short on the low of the previous session, and also in this case using a sell stop order. And there will be no position management such as stop loss, take profits or time exit, but the position will be closed in any case at the end of the trading session. So having said that, I have launched the backtest, and here we can see that all the products have a positive net profit, and this is interesting, but the last one, the natural gas, doesn't seem to be so promising as all the others. But in general, if we have a look to the crude oil here, we can see a very nice equity curve. The first part is not so nice. In fact, here there is a very big drawdown, a very huge and impressive drawdown. But in this case, the drawdown has been between the 28 and 2010, and I usually skip this amount of time because there were in that period of time there were some very strange volatility conditions, and so I usually start my backtesting since 2010 on energy futures. But anyway, if we have a look to the annual period analyzing, the strategy or this market seems to have a very consistent behavior, so a very consistent trend following behavior, and this is really interesting. And so this example may be the base or the main constituents for your own trading strategy that you may develop starting from this idea. The second market is the heating oil future, and it doesn't seem to be so consistent as the CL. In fact, there are so many negative years also, and the shape of the equity curve is not so good as the one on the crude oil. In fact, the last period, so since here, it seems to be sideways, and it's not so interesting, the last part. But we could see the same thing also from the annual period analyzing, and in fact we could see previously that there are some consecutive negative years. Then we had the RBOB gasoline, and this future seems to be quite good, just like the crude oil future. In fact, here we have only 3 negative years, and the negative years are not so bad in general. But if we have a look to the equity curve, it's really interesting also in this case, like it was on the crude oil future previously seen. And the last one is the natural gas future. The natural gas has had a very strange period here at the beginning of the historical data, and as said previously, this is the reason why I usually skip the first 2 years. So I usually start my test from 2010 as on the others energy futures. And also in this case here we can see that the it seems to be consistent all over the years, because there are very few negative years, but there aren't very good years in general. And if we have a look to the components of the strategy, we can see that most of the profits were made on the short side of the strategy. In fact, the long side is losing money consistently, while the short side is going pretty fine. And this is a very common characteristic of the natural gas in general. So, as always, I suggest you not to trade this kind of strategy as it is, because the average trade is too low to face the impact, so to cover the impact of the slippage and commission phenomenon. And so you may take this idea to develop a more filtered and some more filtered and more effective strategies in general.
Okay, let's take a look at the rollover calendar for the next week, and we immediately see that the next week is characterized by rollovers on all bond futures. In particular, we see German futures and the Italian BTP future. Settlement day is September 10th, but the last trading day is September 8th, so beware. On Tuesday it is advisable to roll over all bond futures. I also remind you that, as regards American bond futures, we have already carried out their rollover, and we are trading the December contract. As you can see from this screen, American bond future already have the greatest liquidity on December maturity. As regards, for example, Treasury note or the T-bond future. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.